Good morning, traders. It is 8 a.m. Chicago time on Tuesday, the 22nd of September, 2015. Thanks for joining me. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. We just got the FHFA house price index came in at 0.6% versus 0.4 expected, slightly better. And let's look at what we have here for the overnight. Lots of action overnight. The Japanese markets are closed again today. European and U.S. automakers are affected by a massive fallout from the Volkswagen EPA emissions scandal. If you haven't heard about it, Volkswagen has had a software cheat on its diesel vehicles, including the Beetle, Jetta, Passat, and the Audi A3 is what we know of right now. Audi lost a substantial, Volkswagen lost a substantial portion of its stock value yesterday, and it took another hit today, losing about 8 billion euros in value just this morning. As a result, the FDAX, which VW is a component of, is down 3.13% overall. When you look at how these automakers are doing, they're getting pummeled across the board, and that includes U.S. automakers. Companies including Ford, GM, and so on are down a couple of percent. So we're seeing a reaction here. The market's down approximately 32 points, 33 points from yesterday's close. Let me see exactly. It is, 33 and a quarter points from yesterday's close due to that. And so we have a pretty decent gap down this morning. So it is something to watch. So other than that, risk off across the board. The dollar is flat to stronger. Euro is flat to weaker. And it looks like a flight safety day so far. Looking ahead at what we have in store, we just got the FHFA house price index. At 9 o'clock, we're looking for the Philly Fed non-manufacturing business outlook survey. We're also looking for Richmond Fed at 9 o'clock Central. And then we have U.S. Treasury bill auction at 10:30 and a 2-year note auction at noon. These all times are Central. After the close at 3:30 Central, 4:30 Eastern, we're looking for API crude oil inventories. API, not DOE. My news feed just went down for some reason. Okay, so that's about it for today. Let's switch gears towards the technical picture here. There's a lot to talk about. So yesterday's primary hypothesis, and we got a lot of bars yesterday. Yesterday's primary hypothesis is a wide choppy open. Wide choppy open. If you were here yesterday, you will recall that we were in the middle of this fairly balanced zone. I had indicated that we are very much likely to take out the high from the previous day, and we did. That was hypo 1. So we had our pretty wide choppy morning, and then we did take out this prior day's high. So that was the primary target at 67.50. Done. Market pushed through by a point and a half to chop around against that high, and then we had a really strong rotation down, pullback, and then a continuation move before the market balanced again and ended up going back. So what we had is a neutral day. Here's the IB high, the IB low. IB stands for initial balance, which is the first hour of business. And the reason we track the first hour of business is because the the expectation is that OTF, or the higher time frame, or the controlling participants in the market, get most of their business done in the first hour. You can see that on a volume histogram, like a half hour volume or hourly volume histogram. You'll see that there's a peak right at the open, and then volume drops off through lunch, and then it picks up but doesn't get as high on the close. So we're tracking, what happens in the first hour, and when the market breaks it on both sides, we call that a neutral day. And yesterday was neutral to the upside rather than neutral normal. Was not quite neutral extreme though. So yesterday looked bullish, and but to me, and I did tweet this out. Let me find that. Find that for you here. So I put out this tweet here at 11:36 a.m. saying the profile showing anticipation of higher price failed. So the market's looking for higher prices. As you can see here, this tweet was at 11:36, right in here, right after the first impulse move down, and I said that the anticipation for higher prices has failed. The market now is back in balance, and the auction is most likely going to test the next key area down, which was 40.50 and 39.5. 40.50 and 39.5 are points of control, and that's what I was looking for. So it's done that, but it's done it in the overnight session. There's a discussion back and forth as to why I anticipated that, but overall, we are auctioning pretty well, and given the activity lately, here's the 39.5. I'm taking it from the gap down, and I'm looking at this value. And recently, if you bring this profile all the way over, it pushes the point of control for this composite zone up to 60 something, 69 or 60. Right here, if I take this entire zone at 60 right there. So overall, the market's saying that, let's push this to the back. So overall, the market's is building a more balanced profile, as you can see here, a nice Gaussian in the middle with a small second distribution below, and we are trading right in this MCLVN right now. This is it's very important for buyers if they want to hold the territory they've gained back towards 2012. It's very important for buyers to step in and defend this area coming into today. If we drop through today, and that's my expectation is for it to find responsive buying back to 39 and 40, and potentially push back to 60, where the majority of the volume and the most valuable prices are. So if it does not do that, though, then what is anticipated? What's anticipated is that we get to that 1913 that I talked about last week, 1914, 1913, and tests the next most valuable price below, which is this high volume node right down here. And that's how the market cycles. If it's not able to get the buyers to push it back into where prices were accepted previously, then the next most accepted price is likely to be tested next. So this morning is a huge opportunity, in my opinion, in that the expectation is that we would see a battle early on. I expect it to come in, and I expect the OTF to be fairly aggressive, at least the intermediate OTF to be fairly aggressive coming into this morning. And I expect responsive buying. If we don't get responsive buying, then it's just pedal to the metal on the short side, looking for 13, 14.50 and 13, and that's how things are shaping up, and that's my primary hypothesis. Hopefully you got all that. So here it is on the 15-minute. The 2-day profile, just based on the fact that we gap down. We gap down and we're holding this area. So we build a 2-day profile to see what has happened volume-wise within this area. And you can see that this is a multi-pronged profile with a significant amount of balance in the middle. So this 60, 57, 60 area coming back up as the market comes back up into it, it's going to be really important. You might make a note of this area as a strong magnet. It becomes a much bigger magnet once we get above the 43. Then once we get above the 43, then we would want to catch a tail on the ride up to 57.50 from there for about 14 points. If not, then if the market does not make its way up here and push through the 43 this morning and starts to rotate back through the open and through that LVN area, then again it's likely to catch 13.5. And if I zoom out here or go down, you can see that this area here is a magnet. It's got an open point of control from the 4th. Let's look at the 4th so we know what our template day is, or our anticipated copy day here, and it's a completely balanced day. The 4th is likely to be a pretty strong magnet. So back again, if it's not able to get through that MCLVN, it's 13.50, 1912 and a quarter, and that MCLVN again is in the 29 area right here, right where we're trading right now. I hope that's not a confusing look at Hypo 1. Hypo 2 is that we end up with an open auction out of range. The market bounces around and it forms another balance area with a gap down below. But I anticipate an attempt higher, as this will likely be seen as cheap. And again, defending the 1929 is key. I expect it to try, fail, and push lower on Hypo 1. Hypo 2 is chop and stay and make a push, but stay in balance. I do not believe, with the uncertainty that we have, especially in the auto sector, don't believe that anybody would have the incentive to step in right now before we know what the EPA is likely to do. There are potential criminal charges against Volkswagen, and the way the market's seeing this, as they should, the way the market's seeing this is that if one automaker's doing this, let me clear my throat. If one automaker's doing this, then others are likely to be doing this. And if you haven't heard what happened, essentially what Volkswagen built into the computer system on their diesel engine cars is during testing, when the as far as I understand, and I only read one article on this on Bloomberg, when the car's hooked up for testing, a routine starts initiating that triggers the emission control system on the engine, which reduces the emissions 10 to 40 times versus when the car is running normally. So when it's out being used, it's emitting 10 to 40 times EPA standards versus when it's being tested, where the emission control system kicks in, and it tests out at a much lower emission output. So it allowed Volkswagen to compete in a sense that it's could say that its cars are lower emissions and meet the emission standards. Volkswagen's been making a push now for several years to regain a large portion of market share, and that's one of the ways it was doing it. And the CEO has been replaced and will be terminated on the 25th of September and replaced by Porsche CEO. That was announced this morning as a way to repair the situation. So it's a big deal because the auto sector is a big portion of the major indices It's not a driver, it's not a huge driver of the indices, but it's a pretty significant portion of it. Hence the bailout, the government bailout in 2009, and so on and so forth. Anyway, I'll leave you with that. My time is up. Um, Not much more to say than that. I can't get into any other commodities, but hopefully this lines out your day. Again, watch for a retest of the 40.50 from below. If it fails to push higher this morning, if it fails to catch a bid, then the short side it is, and there's a high potential for a trend down because of the gap and because of the attraction down to 1913.50 and 1912. Good luck, and I'll catch you tomorrow. Take care.